Aeluma Inc., NASDAQ.ALMU, is gaining significant traction in investor and analyst communities following its most recent earnings call, which many observers interpreted as a clear and deliberate signal that the company is accelerating its transition from development stage operations toward full scale commercialization. At the heart of this excitement is Aeluma's proprietary 3.5 silicon photonics platform, a technology that combines the superior optoelectronic properties of 3.5 semiconductor materials such as indium phosphide and gallium arsenide with the cost efficiency and scalability of standard silicon substrates. This hybrid approach is widely regarded as a disruptive leap over conventional silicon photonics, enabling higher performance in light detection, sensing, and data transmission at wavelengths that silicon alone cannot efficiently handle. The community speculation surrounding imminent Tier 1 customer design wins is particularly focused on two high value sectors. First, Apple's rumored expansion into shortwave infrared sensing, potentially for Face ID improvements, LiDAR enhancements, or health monitoring features in future iPhone and Apple Watch generations, positions Aeluma as a potential critical supplier, given that SWIR imaging is one of the core strengths of 3.5 photonics. Second, AI data centers are increasingly bandwidth and energy constrained, and optical interconnects built on photonic integrated circuits, or PICs, offer a compelling path to moving data faster and with dramatically lower power consumption than traditional copper based electrical interconnects. Aeluma's technology sits squarely at this intersection. Analysts who have reiterated buy ratings are pointing to several catalysts: the company's relatively unique and defensible position in a space with few competitors capable of matching its 3.5 silicon integration approach, a low public float that amplifies price sensitivity to any positive news, and the broader macro tailwind of surging infrastructure investment driven by generative AI workloads. The low float dynamic, in particular, means that even modest institutional accumulation or a credible design win announcement could produce outsized price movement. More broadly, the conversation around Aeluma reflects a growing recognition that next generation AI infrastructure, including high performance computing clusters, co packaged optics, and optical I/O, will depend heavily on advanced PIC technology. Aeluma's ability to manufacture these circuits on scalable silicon platforms while retaining the performance advantages of 3.5 materials gives it a potentially critical role in the supply chain for both hyperscale data center operators and premium consumer electronics manufacturers. If anticipated design wins materialize, it could mark a substantial inflection point for the company's revenue trajectory and market visibility.
The stock is up 14.59%. This is Tuesday, the 24th of February 2026. So far, it's only or roughly 570,000 shares have crossed the tape. 50-day average is around 415,000. So effective float is a tiny one. So yeah, you could call it a low float stock. Have to borrow. We don't have the percentage. Short interest, I think, yeah, I think quite elevated. I think 15%. I'm not sure, but something like that. Underlying trend is now strongly bullish. Is strongly bullish, but there are no extrapolations yet. In the coming days, it might come up. But the stock only started trading all the way back in getting to a year now, getting to a year since it started trading. Projections are saying, let's see what we have. 23.89, 27.79, 30.19. Any odds those will print. Let's see. As a matter of fact, yeah, let's see. Okay. Can we say that can we say that we have a cycle here that is, yeah, we can say yes, there is a cycle here. We can say that. It depends on where you want to begin. Do you want to begin when it started trading? You can see that it began there, and then that one half of a cycle ended, and then another one has probably ended. Okay, but the first leg is quite a wide one. Okay, but in any case, the probability of it retesting, let's see, probability of it retesting 19.09 is statistically higher than 50%. So I'm considering the values that are held on the strip. They are the, as you can see, SMAs, the simple moving averages. So I'm considering the first value. The first value is the 10-day moving average. It is 21.31. If that value is greater than our target, which is 19.01, then we know that our probability, or the probability of 19.01 printing, is greater than 50%. So that's what we have. Previous projection not in play right now is, which is 20.71. The probability of that printing is oh yes, greater than 50% as well. This rejection at 21.70, less than 50%, unfortunately. Yeah. So statistically, a lot there's hope that things can may play out. Let's see now. Previous highs may play out. This is the weekly chart. Nothing very much here. Okay, projections are all downward. Let's see what we have on its 4-hour chart. Okay, high prices. The strength it has is expected to remain in place up till the pre-market session of tomorrow. Then after that, is expected to consolidate it up till the 5th of March. Okay, projections here are saying, let's see what we have, 17.93, 19.50, and 20.46. Let's see whether it printed an intraday high. Yes, $18 printed today, $18. Yeah, just slightly, it's now at a slight discount to that intraday high. Okay, so in the coming days up till okay, this is the 200 period moving average. Let's see what we have when it's 10 period moving average. Yeah, volatility is expected to remain in place up till early March, based on this 10 period moving average on this 4-hour chart. We can also have a look at the market grid to see what it's going to tell us. Market grid is let's see, gives us a structured range of prices. Okay, this is also pointing to that intraday high I showed you earlier on. So it has a potential to trade between 18.15 and 16.39. But as things stand right now, it is profit taking may be going on. It is approaching the extremes of its resistance. At the same time, higher prices may go ahead and print, but it may be as a result of aggression increasing and market thinning. Yeah, market participants are thinning down. So the people who are participating, who participated as of Friday, the number of market participants who were involved in the stock as of Friday the 20th, so the number has decreased since then. The number has surely decreased. So the reason why it probably has continued to advance is because the number has decreased and there are few market participants are getting involved. They're contributing to the aggression. At the same time as well, they may begin to, exit the stock, and the prospect of a pullback happening is may continue to increase, even though it may continue to advance and even print higher prices. So caution is surely warranted. Caution is surely warranted. So in terms of it's at 17.73, doesn't it has a good this is a good, yeah, is it a good support? Okay, it has a better support here at 17.48 and 17.4. So the 40 period moving averages, and the 40 period moving average and this R1, they are forming a robust support here. So something might happen if it pulls back to this sort of level. Yeah, okay, so that's what's going on right now, and I'll continue to update you. Yeah, aggression is very high. It's thinly um, aggression is high. It's and if the float is effectively thin and fundamentals are sounding good, so it's definitely a stock to watch. And yeah, we'll see how all of this will pan out. Okay, so thank you very much for watching this video.